important e-commerce players, and investors are paying up for access as it gradually prepares for an IPO. It's now valued at $95 billion. That makes it also America's most valuable private tech startup. Just last month, the tender offer attracted $4 billion in bids. So why are investors so interested in Stripe, and what does it mean for the traditional credit card names? Let's ask MoffettNathanson partner and senior analyst Lisa Ellis. Lisa, welcome to you. I think my first question is actually, who are Stripe's competitors? Are they actually banks?
No, their direct competitors are these other kind of payment plumbing firms like Adyen, a PayPal, a Square, like a Fiserv and FIS. These are all the businesses that sort of sit below the surface and do the plumbing that enables merchants, companies, both online businesses and in-store businesses, take card payments.
Sure. So when we see news, for example, some of their partners, they're now partnering to offer credit cards and debit cards. I mean, let's play this out. As Stripe is entrenched now in e-commerce because it offers the flexibility a lot of people couldn't previously get for kind of processing these payments, what does that business model look like in a few more years? Do they simply continue to take a toll of, the growing portion of e-commerce as long as they can maintain market share?
Yeah, exactly. They are the plumbing sitting behind big players like Shopify, parts of Amazon, Instacart, DoorDash, all these big online firms, marketplaces largely that have have a huge amount of e-commerce volume. So they will continue to grow with them. Stripe grew about 70% in 2020 as all of those businesses got a huge boost with the pandemic. And yeah, they do, as they grow, they become, as you highlighted, kind of a frenemy style dynamic with banks and with the card networks like a Visa and MasterCard, because they offer some banking services like almost on a white label basis. So they sort of sit in between and can sometimes sort of commoditize a bit what the bank or the card network is doing. So it's not like a direct competition, but it's certainly something to keep an eye on because it's kind of a frenemy dynamic.
That's a great way to put it. And we know that this is a company investors in the public markets have wanted access to for some time. They're so big now. This tender offer, as I understand, was in part a way to let employees whose stock options might be about to expire kind of monetize those. So sounds like they're still maybe readying for the end of this year, early next year. But is this still going to be an attractive name once it goes public? Because this is a high valuation. Look at Uber, look at some of the other whales that have gone public this way. They haven't enjoyed great performance.
Yeah, we'll have to see, if and when Stripe finally does IPO. Like you said, it's always a little tricky when these very large companies move from the private markets into the public markets. And they are taking some steps, as you said, to try to kind of smooth that transition. But over the long term, Stripe is a fantastic kind of agnostic way to just play global e-commerce because they're sort of sitting behind the scenes. You don't have to pick, which country or whether you think it's going to be Amazon or Shopify that wins. They're actually sitting behind the scenes as sort of the plumbing serving all of these players. So as long as you believe in the long-term growth potential of e-commerce, they're a good long-term play.
And it's telling that Shopify itself is often one of their investing partners, that they clearly view this as, necessary and attractive technology. So final question, what differentiates Stripe ultimately from the competitors that you earlier mentioned?
Their tech platform and their tech, their sort of innovation DNA is really where they're differentiated. The way they said, because they're working with startups and really cutting edge e-com players, those players are pushing them to be very innovative and, at a very rapid innovation, build out global capabilities, build out some of these card issuance capabilities, banking as a service capabilities, et cetera. And it's that kind of tech, not just their existing technology, but their banking as a service capabilities, et cetera. And it's that kind of tech, not just their existing technology, but their sort of laser focus on staying cutting edge on the underlying technology. That's really what's going to keep them ahead of some of the other alternatives.
Sure. And for now, you still have buy ratings on, the likes of Visa, PayPal, MasterCard, Square. So it seems like the growing pie may be lifting all these boats, at least for the time. Lisa, thanks.